Let's see. Live. Alrighty. Here we go. What's going on? Instant like. Haven't even done anything yet. Who's out there? Got one viewer. Oh, 2 likes. Look at that. Done nothing. Should just leave these things running in the background. People hit like. Right. So let's talk about levels. So this is a just a live stream, pretty much just about levels, because someone's asked me to make a video about levels. So I thought before I actually make a video about levels, I might do a live stream about levels and see if anyone actually has specific questions regarding levels, because then they can all be put into the video. So here we are. Let's see if we got any questions. And if not, I'll just start. But basically everything that can change the direction of price on a chart is a level. So, trends, they're levels, holds are levels, range holds. So we'll talk a bit about range holds, because there's not a lot of educational material about those. So we'll talk a bit about those and the further levels that they can create. Breaks are obviously levels, origins are levels. And breaks, can become origins, so they're effectively the same price level, but they act very differently and mean different things. And the thing that's common about all of these is that they can change, whether they are support or resistance. So they're initially going to be created as something. They'll be created as a support trend. They'll be created as a resistance hold. Basically they will all be created as something, but they can change what they actually do because of how the price closes. So it's all just about how the price closes. If it closes above, below, that can change the state of it, and then that can be confirmed by things like a hard close. But quite often it's already very obvious by the time it's hard close, because it's either rejected or created support and sent the price up, or done something along those lines. So sometimes you wait for the hard close and the level is already done. So and the other thing is that sometimes there just is no level, and so that's where time comes into it, because the level just won't be created until something closes. So if we start with something like trends, so just take very first trend that existed between these two candles, that was a trend. And if we come all the way down here and have a look what happened, the price opened above the trend and it went up. So that trend, because the price ended up over top of it, managed to close over top of it, that was a support trend, even though it was a down-facing trend. And based on how you do trends, and there's other videos obviously on how you actually move trends around, this one moves up to here, and because that body was on it. And as you can see, later in the future, that trend becomes quite relevant to actually support price. So trends are kind of always there, even though they may get broken. but they can be recovered, which is what's happened up here. And it doesn't really matter which way they face, whether it's up or down. They can act as either support or resistance, which is something that will be quite evident up here. So we've kept on bouncing up, so our trend ends up all the way up here. And at this point, we don't revisit that trend. We stop short of the trend. And this is where time comes in, because time now creates a level. We didn't touch anything, but because we simply closed the candle without revisiting the level, we now have another trend, which isn't there. And then we go down, so we have another trend. It's also the first time we get a support or an underside trend, which is through here. So blue to blue, very first one. And you can see in the future, that creates a bit of a bounce and it gets lost, etc. We also create hold levels. So a couple of different types of hold level. There's your stock standard hold level, which is this one. And there's range holds, which is this one. And the core difference is just whether it engulfs everything, including the wick. So this candle comes all the way down, engulfs body and wick, which means this is capable of creating a range. Doesn't mean it's going to, because just like any other hold level, it can fail, but in this case, it's kind of the wick and the body are basically the same, but as a range hold, you would run the fib from the wick to the wick, so just the entire size of the candle. And what you can see in here is that it never managed to actually close below the first level, and ended up bouncing back into the hold off the trend. So all of these things are levels. So whether they're trends, holds, and then of course, because all levels can change, if you close inside this hold, which this candle here did, that level can then actually act as support. So not only did it close over the downtrend, but it closed above the hold level, which means it has the option to bounce. And in this case, there's nothing really for it to bounce to, because we haven't actually created anything else as far as support or resistance in there. We don't really have a break level because we haven't had two candles, and so all we're doing is basically bouncing off the top side of that trend. So however this candle closes then actually creates a new level, which is this one, and it's just the trend. So in this case, this down-facing trend never actually got revisited, because trends don't always get retested. So we don't worry about that. It's gone. And with this one and the trend moving across here, because we then came back down, closed underneath it, we rejected off the trend, came back down, and created a hold level. So I'll leave this range fib on here for the sake of it, but what you now have is you have another resistance level, which has been created in here. Okay. And I probably should have put range trends on here as well. So that's the first thing we forgot, or I forgot. And that would be a range trend through there. So you've got your first accumulation range between these two distributions. We've got a hold level, we've got a range trend, and unfortunately, for the price in this instance, which went down, we approached that hold level from the underside. So the wick just started from the wrong side of that trend, and it came up into the hold and rejected down. So that sent price down, and this range trend doesn't move, but as we break the normal trend, we can move it. Not a bad idea though sometimes, just especially with the higher time frame ones, to leave them in place, because they'll give you confluence with things like this, where we actually come up here and reject off the back side of it when we do the retest. But the trend actually moves, so it goes to here, and that becomes our new trend. So because we've got a couple of candles in a row here, and we've got a series of candles in a row down here, we now have break levels as well. So we have a break level up here, which can act as resistance or support. And we have a break level down here, which can act as resistance or support as well. And so now when we bounce off this new trend, which is what's going on down here, we do a bit of a liquidity sweep, create a new hold, head up, test the backside of the break. So basically they're all just they're all levels, so that's now the levels that start to get interesting now that we've got way too many lines on our screen, can be things like range levels. So in fact, if you look at how these trends actually still operate in the future, you see we come down, dip into one, go up, the other one has resistance. But there's lots of reasons why price rejects here, and sometimes it's quite hard to actually figure out what level it actually was. So here is a hold level, and here is a candle that closes inside of it, which means that this hold level at this point reverses, or can reverse, generally does, and becomes resistance. But it's also actually, it's a candle that's actually closed back underneath this trend that goes all the way back here to 2019. So there's two reasons why that actually rejected there. Plus we've got this full body engulfment here, so there's a range, there'll be ranges in play. So this actually failed to create the range, so that's what caused it to go up. So it closed, and one of the things you'll notice when you really start looking at ranges is how time and price is just so exact. Like this is a 2-month candle, and it just happens to goes down, but happens to pull back up just above that level just prior to the 2-month close. Then it takes a bounce, because what it's going to want to do is it's going to want to come back up here to 102, but it's also closed inside this hold, and it's back under that trend, so therefore there's going to be areas of resistance which can create a rejection before it even gets to that range level. So in amongst all this, you've got trends, holds, range holds, you've got levels that actually supported the price and tried to send it back up, which were created by the range hold. Do we have an origin? Don't know if we do. Yep, we do. Oh, no, we don't. That touched that. No, it doesn't look like we have an origin in there. So, because all the break levels have been continuously hit, and no failed distribution or accumulation, so there's no origin levels in there. To find one of those on a different time frame for the video. Okay, and you can see how some of these things that once acted as support in the future become resistance. So the same level, but it can flip one way or the other. In fact, it flipped back to support here, and then it back to resistance here. And you can sort of see how sometimes there's no knowing. Like with this particular candle that was here, when it bounced off the top of that first downtrend and that reversed hold level, there wasn't really any knowing how high that would go, but where it stopped created something, and how it stopped created something. If it had stopped a lot lower, and if it had stopped a lot lower and the next trend was down and it opened on the top side of it, then it could have had another bounce and gone for another 2 months. But given that it went up high, ended up in reverse, it's very hard to break a reverse trend, just because when the candle closes, even if it closes basically flat, the next one is going to be underneath it. So it's good old reverse trends, pretty hard to break them. And yeah, that's levels. So what are we doing right now? Well, we're rejecting off a trend, and we're rejecting off a reverse hold, and we've got a break level down here to retest it at 68,900 and something, so it's a pretty good chance we're going there. Or maybe the range level, even lower. Okay. Should the next candle go and touch? It doesn't have to, no, because it can create. So should it come all the way down here? Nope, doesn't have to. There is other trends, so you've got this one there, and you've got that one that got broken and retested and became there. So the options for this candle, it can bounce from either the range level here at 63. It can bounce from the retest of the break level here at 68.996. There is a range hold here, which I think it's just hit, maybe nearly, not quite. So what have we at? We went down to 70,144. So a little bit lower than that at 70,067. There's actually the start of this control here, or this range candle. So it could just take a little poke into that and then move back up. So that's also possible. And then it can create levels depending on how it moves, because if it was to, we're talking 23 days, if it was to end up with a long enough wick on the bottom of it, the next trend, which would end up on that, say the candle ends up here at about 80k or something, or probably the area with confluence would be that, which is the break level. So let's say it ends up above the 74,522, but still a blue candle. It'll then have this new trend. It'll be above the break level, and then because it closed inside the break level, it's quite likely then to actually bounce back up and test the reverse hold again. So, or in this case, probably run into the trend or something else to the upside. The only way that this can really become some super bullish thing is that if it actually completely gets back up above this 87,325 in the next 23 days, and then bounces to continue through to test this top hold, which is probably the least likely scenario out of everything, just given the way the price is going. And of course, there's other levels. So you've got a reverse hold here, so broken hold. That's down there at 60k. You've got the body of this 2-month hold here at 62, and this is just one time frame, of course. So there's all these different things across all these different time frames. So normally when you're getting sort of big distribution, quite often what ends up happening is they'll close the candles just on the wrong side of trends, or they'll just like where it is now. If we were to fast forward 23 days and just close right now, then the first thing that happens is it comes up and it can hit the backside of that trend. And of course, being under the break level, maybe it spikes up a little bit higher, grabs some liquidity from up inside that range, and then as time ticks on, it rejects and comes down. So quite often price will go the wrong way first, grabs the liquidity, but it's all about where did it start. So if it starts underneath resistance and then goes back up somewhere within the time frame of the candle, it normally rolls back over and comes back down. And especially when it hasn't kind of logically found a bottom yet, which you wouldn't say that that's finding a bottom at that level. At a minimum, it really should be tapping this, but maybe moving forward to the next range level. So looking at range levels, you've got 1. So let's just delete everything, eh? Blank chart. Okay, so we'll start with this. Our accumulation range. So you've got level 1, level 2, or actually 1, 1, 6, 1, 8, 2, and 3, and 4. Okay. Now, where price ends up closing, you can often, like say this candle here, which actually went up through 2, so it went straight up through the 1 to the 2, pulls back, closes, but it's still above. And so range levels can be a little bit funky where they don't really need to be hard closed. Sometimes a candle can actually just go through all 4, close above the top, bounce off the top, and continue up, which you'd see that happen a wee bit on low time frames if there's some kind of real big break on a low time frame. With a high time frame, you can kind of see how it just works its way up. The way you would use these levels is more for swing trading, more for sort of just getting a bias of direction. You'd say, okay, well, we've hit this 3 up here at 125. The chances now that we come back down, if we close underneath it, pretty high, and that's obviously what's happened here. The 2 is kind of the halfway point. If you can stay above the 2, you'll probably end up heading up, to the top. If you reject off the 2, you'll usually come back to the 1s. And the real one you just never want to lose is basically this 1. You don't want to lose that 1618, which is why for the next 23 odd days you really want to see that thing get back up above there. And if it does, it can push up to these higher range levels. But it's never just one range like this. So that's your accumulation, but you've also got your distribution range. And this one, well, it's going to want to maybe close inside this bracket. And if it does close inside that bracket, it could end up dipping down to the 63 and then bouncing back to the 178 and then rolling over and coming down even to the 39. There's no difference. This coming back to 39 is no different than this one taking it up to 125. So it's all just levels. And of course, there will be older ones. So down here, you got a couple. And you can see how back in that really, really early part of the bull run, created a range, went up, hit the 1, managed to close above, came back down, up, hit the 2, managed to close above, bounced around for a bit, managed to break through, hit the top. And at this stage, you then actually got another range forming inside of it, which was this one. Oops, bring that up a bit. And that one really took off, as you can see. Ended up closing above, coming back down, grabbing some liquidity, and then taking off to the upside, which created this one, which is that final one, and the one that we're basically in now, in full reversal, and nearly tapped that 1 level. So, but yeah, if we look at this part of the bull market down here, there's nothing being created in the opposite direction. Back here there was, because that was the end of a bull market and it was becoming the bear. And then down here at the bottom, they tried to send it to 0, but yeah, it broke. And the candle closed up inside, which reversed it, and then that was our reversal. And this wasn't a proper range engulfment because it didn't engulf the wick, and ended up flipping that, and off it went. So what happened when we get up here? Well, we created that reversal, no different than what we did back here in 2021. And now what's happening is it's working its way both down through the accumulation levels, but at the same time, it's also trying to achieve distribution levels. So you've got both of these in play. So, for example, if 70, doesn't bounce it back to 83, or maybe bounces it beyond 83, but then it hits 87, then that could actually create the rejection. And if 70 doesn't bounce it, it could be 63, which is part of the distribution rather than part of the accumulation. And it would be a little bit hard to tell because it's quite close to what the actual hold is. So sometimes you don't really know, is it this level that's actually sending it, or is it this hold candle in here, the final hold of that candle, is that what's actually sending it? And then down here at about 57, we've got the whole range that existed in that first part of the bull market, and of course hitting the top of that can actually be support as well, so it can bounce off that. But closing back inside of that can then do things like break the break level, which is part of this range, but because this one, if you close back inside of it, is going to try to push down, and pushing down potentially gets it underneath the break level. So these are range levels. Yeah. 6 viewers. Any questions? And can BTC just go up just for a little bit? Zek, go Zek. This is inside a weekly hold, so assuming it doesn't get stuck in here, it should come back up here, just in case you're looking for something along. Everyone's still in disbelief. All right. So you can see the just these weekly range levels here on Zek. If you just get rid of everything and just put that there. So you can pretty much see how this full engulfment rejected initially from the 1, got above it, went up, hit the top, failed to close over the top, created the hold level. Not a range level, but a hold level, which is enough to say, look, we're going down. But there's a couple of bounces where it, just kept on pulling back up above that 3rd level until eventually it didn't. And then down it goes. And it broke through this trend, went up. And this is probably a really good illustration of why it pays to know about range levels, is when it broke this weekly downtrend, you might think, okay, well, I'm going to go to the hold, but really the answer is, so you might think I'm going to come up here to 615. Really the answer is you're going to go to the first horizontal resistance. Now the first horizontal resistance is actually this 3618 level, which is 559. So if you'd taken along on here, you would have been closing out of it pretty quickly. Like from when that closed, it would be what was that, 531, and your first resistance is actually 559, versus thinking your first resistance is actually going to be 615. Is there any way to see if a range is going to fail? No, not really. It'll either be created or not. So you'll either get a full engulfment like this, and then it's really just a case of which level does it achieve. Uh, there's about, if you get a full engulfment like this, over time, and it's not always a case of going straight up, but over time they can do this sort of thing and hang around in here for a bit and then go up there and then end up here. It's about 50%. I've only got back testing data on Bitcoin, but it's about a 50% chance that it gets to the top. And the funny thing is about it is actually the probabilities are it either stops in here or it gets here. There's actually, if it gets beyond here, it generally gets up here. So, which is kind of why this level is quite important, because that's considered as the base of the range. So if it can get over this, it normally works its way through these. On the 4-hour sol, we have just bounced off the 1 of the range level. Let's have a look, 4-hour. It's weird. Default settings undefaulted. Let's have a look. So are you looking at a historic range or are you looking at one that's up in here? Because you've got this, which was acting as resistance here. It hasn't hit the 4 yet of that one. And ones like this one here at the top, sometimes it pays to check that on a different chart just because it's so close. Could be slightly above, could be slightly below, but either way it's gone. It looks like that was a range level just based on that bounce there, that bounce there. And those are the only two. So it hasn't retested that 95, but it would have to get over 92. So if it closed back over that 92, it could head up somewhere into these two here. And if we go back and have a look historically, come on. Got to go a long way back at the moment, look at this. Crazy times. Oh, there's some 4 hours. Oh, my PC just lock up. My mouse just went flat. There we go. Yeah, so if there is another 4-hour range, it would have to be all the way back here. be that one right there. So same sort of thing, up to the 4, bounce back to the 50%, up and over, bounce backs in, grabs some liquidity, takes off. And this one may even be pretty close as well. Just that one there. So now, let's have a look at, oh, they're dailies, the heck. Okay. Oh, let's just look at dailies. Where are we in the dailies? Let's just get rid of these 4 hours. So there you go. So we have actually gone back into that really old daily range, top of it there at 92. And then the other one, we've bounced off that one to the 1618. So these daily ranges that the price is in now, if you had no other lines on your chart at all, you'd see that whenever that was, 31st of January, it closed back inside that 105 range and then rejected down, and it's actually gone all the way down to the base of that range now, and it's under the base of that range, and it's inside the 4 of the older range. So getting out of here and getting above 92 on the daily is quite important if it actually wants to recover. Otherwise, it'll just keep working its way down through that range until it breaks it. And that's all based off stuff from all the way back here in December of 2023. If we look at the current ones, so that was the start of that distribution. And whenever it just sort of keeps going like that, it's usually just because there's something bigger. So if you went and had a look at a higher time frame, you'd probably find that there's just something bigger in control of everything, like this big one up here. Yep. And would have hit the 4 of that today, I think, or not quite. So that's still got to get down there to 84 to hit the bottom. So the other thing you do just with range levels is you always look to see if they have some kind of structural confluence. So if you just sort of want to see that something like the level lines up with something that is roughly support or resistance. So it could be a break level or a reverse hold or an origin or just something. And that's kind of how you would crystal ball it a wee bit. If you were looking at this candle up here and just going, okay, I wonder if we're going to create a range off this, the first thing you'll be looking for is you go, okay, well, do these actual levels mean much, on the way down? Like, do they line up with break levels or holds and that sort of stuff? Or range trends. and then this is how you don't make it back. So you close underneath a range level, but you don't make it back because at the same time you've closed underneath a range trend and pushes back up, rejects off the range trend, and starts coming down, trying to find the next level for support, which would have been that break level, which is now in the process of either becoming an origin or not, depending on whether it closes back up inside and bounces, or whether it just keeps going down. So that's broken that one as well. And we're inside a hold. It's not looking very good for Sol, is it? So most likely, weekly target's down here. Yeah. Engulfed by the first candle or engulfed by many? So, yep. I'll show you a good example of that. Okay. Sometimes it's just the time frame. So this scenario here, you've got a distribution candle which has been engulfed by 2. So this can create a range, but it's actually not so much this candle as it is those 2 that are creating the range, because that work is distribution. Like if you just forget the fact that it closed up, just think price from here to price down here. Was it lower? Yes, it was. That's all distribution. And it's actually on a different time scale. So sometimes it's just a case of being a different time scale. So when one gets engulfed by 2, have a look at the candle before the one that got engulfed and see if there's actually then a different time frame where it's just one candle, which is what that was. Geez, BNB. I remember when this was like $1,000. Been a while since I looked at this. Yeah, so 1, 2, 3, 1, 2, 3. Yeah. So that's roughly the range there. Failed to close over the top. Back in underneath. Down it comes. I have to go find some new batteries. There it goes again. Yeah, it doesn't look like that's over yet either. Have we gone back to 72,480 yet? No, we haven't. Hurry up. Sol's nearly back up to the top of its short-term range. What's that? Yeah. Just waiting to see if this can close over this 92,694 level and then go for a bit of a push. Some scammer with my name just joined the Discord. I think you'd join with a different name and then change it. And banned. Right. Okay. Well, that's all, folks. Unless there's any other questions. Nice. Okay. Up or down? That's the question, eh? Up. It really should be up. Even if it's not up much, it should be up. BTC landed in 4-day, I think it was a 4-day, 5-day, and 3-day holds, all aiming at roughly the same area that would just be retesting the lower time frame breaks. So it should be up. And Sol's kind of it's in the we were in a situation where basically there was just a real imbalance between longs and shorts, and that started to even out. So now that it's starting to even out, they could technically go either way, but it's sort of looking. It looks like 98 to the upside and 88 to the downside appear to be the area that it's hovering in between at the moment. So it's a little bit hard to say which way it goes first, but that's what Sol's up to. And it'd be a little bit surprising if BTC doesn't at least go back to that 72 area. Yeah, 93 shouldn't be that hard. You got like some low time frame break levels and stuff, but 94, let's see. We got here, we got a range trend. I mean, if you look at the range trend it's trying to break now on the 1 hour, that the origin for that's like 99. There's a lot of time to go on the 4 hour, but if the 4 hour does sneak above 92,147, then it would also at the same time be creating a range to the upside, so that that could give you a push as well. Sometimes things do look bullish like this, and then 5 minutes before close, the candle pulls back. But if it closes up above these sort of levels, then it might try to push its way up. And I think 101 was the... Was it 101? Let's see if I can find it. Not that one. It might be that one. Yeah. So these got entered quite recently. So we're kind of just bouncing around on those. So they're 5-day, 4-day timeframes. So they're not exactly big timeframes. Although when markets are quiet, like we did have 25 days to play out a 4-day one or a 5-day one in the past, but then the market was much quieter then. So these are going to try to come up to 98 and 101, and then all these bigger ones are much bigger. So these ones that got entered about the same time, they could take a lot longer just because they're much bigger timeframes. Yeah. Why do you include BTC? Because assets are not just sold into stables. So the whole point of something like a Sol BTC chart, as an example, is it's people are selling Sol to buy BTC. So if you just look at stables, you're kind of assuming that everybody operates between stables and risk assets, whereas that's not actually the case. There's a whole bunch of pairs which are just BTC pairs with risk assets, and people sell in and out of those. If you talk to Bitcoin maxis, they will say that they will never ever put it into dollars. It will always be BTC and risk asset if they are trading. So that's why it gives you just a better overall picture of risk. Which at the moment is just rejecting trend. What you don't want to see is this up above here in 15 hours time. That could be bad. And range level versus range trend. And bouncing between two range levels. Yeah, it'd be very weird if it bottomed now. I mean, dead cat bounce, sure. Um, but it would just be strange to reverse from places like this. You could see it coming down and hitting, like the overall market cap. If it was to come down and hit this lower origin here, and then suddenly a whole heap of volume comes in, comes up, engulfs the prior day's candle, builds a range, starts moving up. Yeah, that could happen, but it would just be really odd for it to reverse from that exact spot, especially because it's still kind of under the trend. Yeah, and that's not very bullish. And opened under the break, and it's just pushed down into the range trend, and it's just whatever that minimum bounce was up to that 1618, it's all done. It's only really doing the minimum amount of upside that it has to. Whatever the first resistance is pretty much where it stops. Definitely not looking bullish at this stage. Yeah, if you had to say a bias, you'd still be downside bias even now, but it's pretty close to where we could bounce. We're just not seeing it yet. Maybe it comes in the New York session. They could just pump this thing up, and you just want to see, or at least for me, I just want to see a daily close. I want to see the intention to shove the price up above a level before the day closes, rather than what we currently are seeing, which is push the price down below a level before the day closes. So it's this kind of behavior here where they just park it just below the support resistance before the close, up for a bit, down. This just kind of induces a few people to long, and then dumpy dump. So you want to see them reverse that. So bring this back up, close above the level, push up, maybe even 2 days, see them do it a couple of times to make sure that you've actually got a reversal, a real reversal. And build a range. So what I would typically do is I'd look at this kind of stuff. I'd just put the wick to wick like that and go, okay, so tomorrow if they engulf this whole candle, does it make sense? Well, the 1618 makes sense because it lines up with that origin. So then you sort of look at the top and you go, well, okay, well, what do we got around the top? So we'd be filling this fair value gap. We've got that range trend coming through there for retest, which has been hard closed numerous times to the downside, and it hasn't gone back to retest it. We've just bounced off a range trend. So if it stays above the range trend, engulfs this candle tomorrow, and starts working its way up through that range, then that's when your bias would change. And based on the size of that candle, as long as it doesn't change too much between now and tomorrow, it's the right size to do it. So yesterday, it would have been looking at that one and going, do we have any real confluence around this 1618? It's just kind of the middle of nowhere. So it doesn't really make a huge amount of sense. Maybe that level 3 did, that didn't. So Yup. It's creeping up. So there's another range in here actually. Very subtle. And the 1618's got confluence with the origin at the top of this overall range. So yeah, that's looking promising on a 15-minute chart, as promising as a 15-minute chart can be. Yeah. I would have thought there'd be a huge CME gap to the upside on BTC as well, just based on the big weekend dump. Where is it? There it is. It's a pretty big open and closed gap there. Yeah. What you should do is just put a trend on it and wait to see it actually break the trend. That would be the which could be 65, it could be 70, it could be higher than it is now as well. It's just you just really need to see the trend change because whilst it's under trend, then it's just going to stay under trend. So let's see. But yeah, you probably will want to average it a bit because 86 is there's a lot of confluence to go to 86, but the more time we spend down low, the more resistance there'll be, and the harder it is to actually get to 86. So if you're just to do, let's have a look. So from a weekly perspective, uh, 67 to 76, so somewhere between that origin and that origin would be a potential move, and that's assuming it doesn't get back above that origin in the next 3 days. And I'll give you a good example of the kind of complete BS stuff that happens is you get stuff like this, right? This was like Trump dump or whatever. So you've got this origin level here. Price goes down below it. You see there. We'll just get rid of all this. That's your origin. Okay. And let's go. These are your weekly lines. So opens of your weekly candles. So I'll just put 3 weeks on there. And now have a look at that on the daily. Daily. Okay. Dump, dump, dump. Boom, back up. Okay, so last day before the new week, back up above the level. And then back down. So at the moment, you're sort of below that 76 level, which it really shouldn't be able to sustain being underneath it. Let's look at take this back out. So closed above, dived below. And there's a few things it could find support on or retest, but that's actually the origin support level down there at 67. And yeah, 3 days to go, 3 days, 16 hours, just like what you see over here. It could just be waiting to the last minute, kind of like a capitulation thing, and it might just go up in that last day and then come back up above that level. The thing for you is that you've got to really go back up to above this level, and that hasn't been retested, but if we close this candle blue, then that gets hard closed, and then that becomes a level it could go back to retest. And then you've actually really got to get up here. So you definitely should be thinking about averaging it, but averaging it in the middle of nowhere is not ideal. You either want to average it when it finds some kind of good support and starts to bounce, or you want to average it because it recovers support and looks for continuation. You'd be miles away from your weekly trend as well, so because of that drop. Yeah, so your weekly trend is very, very far away. So you can try to find the daily. Yeah. So that doesn't look too bad. As long as it doesn't drop down too much more and end up under that daily trend, it could open on the top side of it, sort of gearing up towards a bounce from the looks of things. So it may get over the top of that, come down here and go back up there. Something like that, possible. But yeah, I wouldn't look to add until you see it break the downtrend. And technically, if New York wants to, and they pump this thing, they can engulf that, because it did start on the top of the trend. It's come down, so they could engulf, and then you could look to add and try to get try to make sure that you're profitable by the time you hit that 85 level, just in case it doesn't get over that. And you might even get a rejection off this as well, so you could, if it engulfs this, you could take sort of a bit of a scalp just between those two levels, let it reject, come down, find support, and then add back again, which just fixes your average even better, and then target that, which has lovely confluence with that origin on the weekly. Crystal ball stuff. It may end up down here, may end up under here. They may do like one of those little ones where it doesn't quite engulf the candle, and then they just keep pushing up anyway, and then hit one of these levels, and or hit one of these trends or the origin, and then just dump. Good old fake moves to the upside. So much liquidity to 129. Yep. And what we got in here, eh? Entry. Just can't make this stuff up, eh? 15 and 15. 15 longs and 15 shorts outstanding. All based on the same type of structure. So 35 at the bottom, 150 at the top. Right. Okay, well, I will go find something else to do. Oh, did we? Oh, yeah. Stupid range trend. Yeah, with this, we really want to see it up over that 92.8. above the range trend, above the origins, above the 1618. And then it can target that 98.4, which would be roughly that. That's the entry, that 91, not the exit. Exit's 98, and it's got 5 days. As long as it doesn't close the next candle inside, 4 days. It's got 4 days. As long as it doesn't close the next 4-day candle inside that 91, then it's probably going to go there. It's got heaps of time left on these. Because these aren't closing candles for 80 days, 110 days, those sort of numbers, 68, 74, 38. So that's 75 and 83 would be the soonest ones closing. Maybe 101. All right. Okay. We'll catch you all later.